Hello, I'm Simon Roderick and I'm the Managing Director of Fram Search. I'm delighted to be joined today by David Semmens, who's the Chief Investment Officer of Wealthify. David, how are you today?
I'm doing well, thank you. How are you, Simon?
I'm not too bad at all, thank you, although we're recording this the day after the Euros finals. So I think, like everyone, I've got mixed emotions, incredibly proud that we got so far, disappointed that we didn't go that little bit further. And I think perhaps today a little bit saddened actually around some of the awful things that we've seen in terms of the abuse that's been directed at the players. So it's very much mixed emotions. But where are you today, David?
So I'm up in Edinburgh. So I live in Edinburgh. I'm from just outside of London originally, but I'm actually much more of a rugby man. So although I'm aware of the football, I haven't really followed it that closely. So you do get my condolences though.
I think I'm the same, but I think this particular team's captured a lot of our imaginations and hearts, really. So, but I'm probably normally in your camp. Thank you for talking to me today, David. I wonder if you wouldn't mind starting with telling me a little bit about you and obviously about Wealthify as well.
Sure. So I'm David Semmens. I'm the CIO at Wealthify. I guess my background is fairly standard for people in my position. So I did a bachelor's and master's in economics at Warwick. I worked at Standard Chartered in the economics research division, and I worked in London and New York. I ran an economics research team in Paris for a year after finishing my MBA at Cambridge, and then I did a few years at HSBC Asset Management in London. My wife and I decided that we'd move up to Edinburgh because we'd always moved for work rather than for fun, and it's a really beautiful city. Moved up here, took a bit of time out, and actually came across the role at Wealthify, which is in Cardiff. So Wealthify's head office is in Cardiff. It's our only office. So until the beginning of last year, I was actually doing the weekly or alternate week commute down to Cardiff, going down on a Monday and coming back on a Thursday. So actually, it's the sort of longest time I've been at home with the pandemic.
And David, you obviously worked for, dare I say it, in the past traditional firms, very well-known names. What first attracted you to the fintech industry?
I think one of the things that really attracted me was it's a very exciting field to be in. There was a lot of news around it, so I've been there for over 3 years now. And I think one of the best things when I went for the interview was everyone genuinely really enjoyed what they were doing. They were very focused, but also it allowed you a lot of scope to make changes. So if I wanted to make changes, so within the investment process, for instance, I could just discuss it with my boss at the time, and we could make those changes rather than have to pass it up the food chain through 4 or 5 layers and then have it come back down. And also one of the key things for Wealthify was that it was the opportunity to help build an ethical investment solution. So that was also very appealing, and that came up when I was interviewing with them.
It's certainly a theme when I talk to people about the agility of working in the fintech industry versus, larger organizations, which sometimes, can be a little bit slow in terms of decision making and everything else. An interesting stat that I read the other day is that the UK now has 100 unicorns, which is astonishing, and that's more than the rest of Europe combined. Why do you think that is?
Well, I think with building a hub like that and getting the momentum behind it, there's a real chicken and egg problem. You need to have the good opportunities to attract the great people. And in the UK, there's been a really rapid rise in interest in startups really over the last 15, 20 years even. But I think one of the key things that we have that differentiates us from Europe and perhaps even the US is the investment environment. So the EIS, SEIS and VCT schemes are very attractive. And I think also it's reaching that critical mass, which we did slightly earlier than Europe perhaps. Obviously, we were in the EU 10, 15 years ago. We were able to attract talent very easily and people were able to move around quite swiftly. Moving to the US was not quite as easy for someone from Europe. So it was a good route in. And I don't think it's too more complicated than that. I'm sure there are lots of nuances. And perhaps particularly in fintech, the Bank of England was very supportive. The regulators were very supportive as well. And I think that's obviously a great help if you've got people who are working with you rather than making sure that it's difficult. The barriers to entry were sort of removed as much as possible within the reason of still providing support to customers.
So it's that culmination really of a good regulatory environment, supportive regulator, access to capital, and then obviously a wonderful talent pool as well, which is made up from people for many different backgrounds, which is really interesting. I can't talk about the fintech scene and obviously wealth tech without asking your thoughts on the Nutmeg deal recently.
Sure. So we were actually wholly acquired by Aviva this time last year. And I think for us, the fact that Nutmeg's been acquired by JP Morgan just provides further validation of the business model and the sector. So it can only be a positive for that. It's going to be a growing sector, and there's enough room for everyone. And really, probably the key winner is going to be the consumer, which is going to have an increasing number of choice. And I think it's a positive. I don't feel that it's sort of a them and us situation. That just simply isn't the environment.
No, absolutely, a wonderful achievement, and wonderful, I think, for kind of UK PLC and the whole tech scene in many ways. What do you see for the wealth tech space moving forwards? Have we scratched the surface? Have we reached the kind of the end of the developmental stage, and actually we're starting to see the full capabilities now? How do you assess the landscape?
So I think for tech in general, we probably are only scratching the surface. I think you're seeing a massive upskilling of people. It becomes much more the default that when people are sending their CVs through, that they have some programming skills, even if they're not actually programmers themselves, or they at least have an awareness of how these things work. But I think particularly within the fintech space, what you're really going to get is an increased level of personalization, which is what people want. So we offer the original plans and ethical plans, but increasingly we're looking at how can we provide a more personalized solution to people. And that's what I feel that you're going to see more of in the things in fintech space. And it's also just the feedback loop is so much quicker, because these companies, as you say, are very agile. They don't have the legacy systems. And I think it's just going to be incredibly exciting going forward.
And are you continuing to see that increased demand? I mean, certainly we're seeing it at the moment in terms of ESG, impact investing, sustainability. We're seeing firms organize themselves in a better manner and understand their own impact on the environment. But are you continuing to see demand from clients in those areas?
Yep. So we're continuing to see strong demand for our ethical products. So we offer as I said, the original and the ethical, and continue to see strong growth in both, which is encouraging. And I think actually it's going to be looking ahead, how do we go from offering an ethical product to offering a sustainable product, which would also be strictly excluding fossil fuels. So most of the funds that we have within our ethical products do exclude fossil fuels anyway, but some of them are involved tangentially in that. And we always feel it's best to make sure that you can guarantee, if you say you're going to be excluding something, you should be guaranteeing that you're going to be excluding that, rather than have a soft guarantee. So for us, that's the next step, but we're still waiting for the investment fund universe to catch up with that.
Yeah, absolutely. Now, I guess it's one of those areas that we're continually learning and developing, and it becomes more sophisticated and more resource goes into it. Again, as you talk about, the personalization to the client can just get stronger and stronger all the time. Talking about clients, there's often a preconception that fintech, that wealth tech is very much a younger person's investment, or certainly a platform for younger people to get involved with. What's your experience about the typical client of, say, Wealthify or other tech businesses?
So I can't talk about other people or other firms even, but for us, we like to say we haven't got a typical investor. Anyone who's got at least 3 months worth of outgoings and cash savings can invest with us. Typical investor on average is around 39, mid-40s, and at the moment we've got around 34% of our investors are women. So that's just looking at it statistically. Obviously, it would be nice if that figure was a bit more even, but I think for us, you can invest from £1. So it's really just stripping out those barriers to investing. Obviously, the difference between savings and investing is when you're savings, you've just got it in cash and there's no risk, whereas having investments, there's always the market risk associated, which is why people need to have those 3 months worth of outgoings as a buffer before they can have an account with us.
We've certainly heard from other firms that they've been very impressed, I think, or very interesting. They've found the level of engagement from clients during the pandemic has been really high. And actually, they've probably surprised themselves at some of those older clients where they've, had a stereotype that maybe they wouldn't want to do things online, have actually been really willing to do things online. And it's been very successful. So do you think that's perhaps where the industry is starting to understand its client base a little bit better?
Yeah, I mean, I think through necessity, people were forced to do things online. So, I mean, I probably can't say how old our oldest customer is for GDPR, but they are quite senior. But I think also, if you think about the firms, we were all forced in March last year to go from working in an office to working from home. I'd been working remotely anyway, so it was quite an easy switch for me because I would occasionally do Fridays at home anyway. But our tech guys got us all up and running, literally within 48 hours, and it's just that quickness. And I think firms expected that. Actually, I think when you call now, and you have someone saying, "Please hold the line. We're experiencing a lot of calls and difficulties due to COVID," and you think we are quite a long way into the pandemic, unfortunately. How have you not staffed up, or how are your systems not able to cope with this? And I think if you look at how the feedback we've got, so on Trustpilot, we've done incredibly well. The customers are happy, and ultimately that's the key barometer for success, because if customers are happy, they tell other people that you're doing a good job, and that really helps drive your business, and it means your customers stay with you as well. So for us, that's what we're looking for, and that's what we would expect. And I think a lot of customers actually did expect that that's how you would move quickly. You're a digital business. If you said, "Well, no, I'm sorry, we're ordering all these laptops and it's going to take 8 weeks to get them," they'll probably be less than impressed.
Absolutely, the pressure was certainly on, but I think if we all think back to 18 months ago, if we had have said how far we've come in that time now, we would have been so impressed actually with how well people have coped and how hard teams have worked to make things like that happen. It's actually been quite incredible what we've done, I think. The fintech industry is often looked upon as with a bit of mystique. It's developing. In fact, I'd say it's very well developed now. There's people perhaps in their second or third jobs within the industry now. But to those people who are considering, dipping their toe into the industry and maybe making that switch from a more traditional firm into a newer firm, what advice would you give them about joining the fintech industry?
So I think, although I said a lot of people do come with the ability, or at least an awareness of programming, you don't have to be a programmer. If you look at our firm, we've got investment professionals, programmers, obviously, but marketeers, customer service people, compliance, business development, and a lot of those latter people don't have to have any knowledge of coding at all. But it's very much, how do you bring a solution to customers, or how do you solve a problem? You don't have to be in San Francisco or London. I mean, I live in Edinburgh. I was working in Cardiff. There are several remote firms all over the world. Obviously, being in San Francisco, New York, or London might make it slightly easier. But I think it's also, if you can articulate why you're particularly passionate about working for a particular firm or within a particular sector, then that comes across well and goes a long way. I think when you get the applications through, and there's no real reason why they want to work for you, when you're getting lots and lots of applications, it helps people stand out in that respect if they've got a strong reason why they want to join you over someone else.
Yeah, absolutely. I'd echo that as well. I mean, I think, you're absolutely right. That the bulk of the opportunity at the moment is in London. All that said, there's some incredible things happening in regional centres, like Cardiff and like in Scotland, and some fantastic businesses being built there and some great support by the local governments. But I would echo that as well. A lot of people that we work with in our fintech practice, they're not coders by trade. They've perhaps got a long established career behind them in banking, in wealth management, and they understand how those industries work, but they want to apply their skills in a slightly different way. And so I too would urge anybody to not just instantly rule out tech just because they're not from a coding background or computer science background or anything like that. Certainly do consider applying. Well, thank you for your time today. It's been really nice to talk to you. Please keep me posted on any developments in the business, but congratulations on what you've all achieved so far, and wishing you well for the rest of the year.
Great, thanks, Simon. Hopefully the World Cup will go a little better than the
Let's hope so.
the
Fingers
Euros.
crossed. It's definitely coming home next time, that's for sure.
I
Take
love an
care.
optimist. Thanks, Simon. Bye.